get this. Looks like I got it recording. All right. So thank you everybody for joining in. I know we'll have a few more jumping in here as we're going along. This is part of our 15-minute webinar series. We were asked to maybe actually break down different budgeting types. 50, 30, 20 method is one of the most common. There's a lot of people that even do this method and they don't realize it. And then later this month, we're actually going to cover the no budget budgeting, which lies more on financial technology and those kind of self-automated things in the background that work. So if you like this class, check out the other one later this month. And then we also are going to be doing one on debt consolidation next week. There's 2 of those offered, one at noon and one at 5:15 on the scheduling. Feel free to, again, check those out and then give your feedback usually after the presentation, maybe a day after that. I send out recording and then a little survey. Please fill those out. Those help us fine tune our webinar series that we can make it better for you. So without further ado, my name is Ben. For those that have met me before, I work with Arbor Financial Credit Union. I've been in the financial realm for about 13 years and have been doing this for about 6 of those 13 years. I've been in bank for a long time, and I'm not saying I've seen everything, but I've seen a lot, and hopefully some of the things I'll share throughout this method will help make things a little bit easier for you. But that being said, budgeting is hard to do. Don't ever give up, and there's no one that's ever going to be perfect at it, right? It doesn't actually get to a point where it's solidified because we always have things that change on the regular. You know, we have life-changing events, jobs, stuff like that. They can always make our budgets different. So don't get discouraged and give up. Always have something going because it will truly make it better. And then, as always, when I recommend thinking about financial literacy, when you want to learn a new language, the best thing to do is read something about it 20 minutes a day. And so that becomes top of mind for you. And then when you want to learn a language, they say about the same timing. So if we think about math and finances being one of the largest languages in the world, this is a good process as well. And it doesn't all have to be about budgeting. Find something that you enjoy in the financial realm and just read about it. So the 50, 30, 20 method is a great method because it is a common one that a lot of us use. But first, a budget lets you decide what is worth spending your money on. There's a lot of us, including myself, at points in my life that it was the other way around. I got paid and then all my money goes to my bills and I don't get to decide anymore where it goes. And when it's tied up, I can't choose to do new things. So it kind of puts me in, I don't want to say a suppression, but it definitely doesn't make things easier where if you don't have as many bills. So why don't we budget? You know, there's a lot of different reasons. These are some of the top ones that I've heard over the years. It's a hassle. I can't keep up, so why start? Budgeting causes more stress than it's worth. I don't have enough money to budget. You know, and we've heard these, and they're good excuses, but they're all the same thing. They're excuses. And something to try maybe in this new year, if you are struggling with budgeting, is to dive in. And you might find that over these next few weeks, as we dive into different budgeting methods, that you pick a combination of different things from that method, right? You don't have to stick to one method. Find something that works for you and then roll with it. Change it, adapt it. If you see a new method, like I said, if you go on the path of reading 20 minutes a day in financial literacy, maybe one of those journeys will be reading about different types of budgets. There's I want to say hundreds of them, but there's a lot. There's a lot of them. And we'll try to cover some of the major ones that I've seen. So the 50, 30, 20 method broken down is quite simple in its own, right? 50% of needs, 30% of wants, and 20% worth of savings. Now, a lot of us will run into the conundrum of what's the difference between a need and a want, right? So I have young kids. So I'm not going to say that coffee is a need, but if my kids keep me up all night and the next day I need a cup of coffee, that might be more on the need side than the want side, right? So there are things that that fluctuate. Gas in your car, whether you're going for work or maybe leisure, even the insurance or the depreciation on that vehicle. So there's a lot of things they're going to fall between, and it's up to you as the driver to kind of make sure that you're staying on track, you know. And the best thing to do is just be honest with yourself, right? Is this really a need? And when I work with younger people, generally it's like, okay, cool. You need a pair of shoes for your feet? Did you need a pair of the Air Jordans? No. So whenever you're buying something, think about if there's a cheaper version or a more modest version of that. And then you know, roll with it. But if it doesn't mean that you can't enjoy nice things, you know, if you have something that nice, if you do like the Air Jordans or that nice pair of shoes, and you saved up for it and it wasn't a whim purchase, well, that's different. You can have nice things. It just has to be planned. And then so the biggest thing about this method that you really want to pay attention to is the difference between a need and a want, and being honest there. And then the savings. Now, I know a lot of people get tied up with the whole paycheck to paycheck, but when I look into their finances, you know, like their pay stubs, seeing where their money's coming, seeing where it's going, if I'm helping them on a personal level, I see a lot of the times that they actually are saving and they're not giving themselves credit for it. Like they take advantage of a 401k, they take advantage of an HSA or a 529 savings account for education. They take advantage of some of these employer things. And so, yes, they're getting their paycheck and spending the entire amount of it, but their savings has already been taken out. I call this forced savings. It's not a real term. I just make it up because it forces you to do it. You don't really have a choice. The money comes in your account, it's all taken out. And I do the same thing. I spend my entire paycheck because the savings has already been taken out. And I recommend doing this for any kind of budget that you might take on, whether you move the numbers more between 30 and 50. You'll see a lot of different people, and I have an example in a little bit of how professionals might do that. But take your savings and make it as automated as possible, right? This is the biggest time where a lot of people mess up or not, fall short, because what they do is they get paid, they pay all their bills, right, the needs, and then they have what's left over. And if it's not that much, they might not actually push it into savings, right? I know I've been there. If I have $100 left after paying all my bills and it's either twiddle my thumbs for the whole week or have some fun with the $100, I know what I'm going to choose. But if you take advantage of it before it gets to us, it makes it a lot easier. So consider that. And then when we try to think about the people that should try this budget, someone that's looking for an easy budget, right? Maybe you haven't really tried budgeting before. Maybe you've just always had enough money. Maybe you're at the point now where you're sick and tired of living paycheck to paycheck. And this is great for first-time budgeters. It only does have 3 categories, so it's very easy to keep track. You take your net income and you divide it by those percentages to tell you where you kind of stay. So at any point you can check it. I recommend through our Level Up program under our Learn tab at arborfcu.org, we have a budgeting calculator that helps you plug in all your expenses that you might have and kind of give you a spreadsheet or a printable version of all your expenses laid out so that you can see what categories they actually fall in, whether they actually fall in a need or a want or part of savings, and to see if you're on par with your 50, 30, 20 budget. Now, there are months that this might change just a little bit depending on if there's heavy spending. You think about holiday season, maybe a month you take a vacation in. This is going to definitely fluctuate, but the idea is your savings is supposed to be forecasted out far enough that you wouldn't have a huge influx. Like it shouldn't just be all of a sudden, there's nothing to savings that month because you took a trip. It should be a withdrawal from your savings to cover a majority of it, and maybe using some of your want money for the rest of the trip. And and finally and foremost, it's for people that are turned off by budgeting. It's just like the idea of sitting down. This is the one that I see a lot of people that have done traditional banking in the past. And by traditional banking, I definitely mean like the check register. Like if you're a check writer, you go to the grocery store, write a check. If you get your bills and you write a check, that's a traditional banker, right? We're seeing that as a dying art because a lot of us use financial technology. We use mobile banking and all the things behind that. But for someone that's in that traditional area where you maybe have trying to get out of that comfort zone, this is a good method for it because it allows you to see your money more fluidly. And this will probably also be inviting for you to check your accounts more frequently. And then you'll actually want to do the online banking or the mobile banking because you want to see your accounts more real time because you're more on top. And this is always, again, complemented, I can't state it enough, by trying to read something 20 minutes a day about financial education. And so with everything, there's things to watch out for. So things to watch out for, you can become overspending. If it does become common, definitely consider another option or a better way of tracking. We have a lot of digital apps out there. I know Arbor Financial, we just took a huge upgrade for our mobile banking and online banking platform where we now have the personal finance manager. If you do bank with Arbor currently and you have not checked this out, I would recommend it highly, as it will help you track all your expenses and kind of see where you're at. And it also can set up alerts and help manage your money that way. So if you're falling out, if you're spending too heavy on a certain area of spending, or what I'm trying to say, a topic of spending, it'll send you alerts or it'll keep you up to date, and it also track it so you can look back and see your expenses to try and change it up. A lot of us, if we're not really happy with where our money sits in our account, like maybe we don't have enough of it, or it's just, it's always tight, or you're losing sleep over it because you're not sure if it's going to be there. It's always recommended to write down first before you really start a budget is everything on a piece of paper. Paper is always going to be the best way to do it. And then follow the categories. If you do try this budget for a little bit, look back 60 days and then print off your statements, right? Print off your statement, look back 60 days, take 2 highlighters, go through and see if there's anything you can tighten up. I challenge you for the New Year's to see if there's anything you can tighten up. The best example I always have is my Starbucks customer. When I was in my 4th year of being a banker, I had a customer come in, living paycheck to paycheck, was tired of it. And she has a singular account. So she was doing a lot of transactions out of it, debit, paying bills electronically by check, cash withdrawals. She had stuff coming in out of her account. So she was there's a lot going on. And she comes in, she's like, I'm tired of living paycheck to paycheck. Can you help me? And so first thing I always do is try to understand where people are at currently. They might sit there and paint a picture, but I like to see the actual transactions, right? The brass tacks of it all, and go through and just, again, needs and wants. See if there's anything you can pull out, because a lot of times you can't change how much money you make quickly or how much bills you have to pay quickly. The best way to get out of where you're at currently is your disposable income. So if you can coin away a little extra to save up for something coming up, obviously emergency savings. But a lot of the times when we think about, again, a budget, it's always going to be different on a regular basis, right? It's fluid. It's never going to be solid. Like I said in the beginning, it's something that you're going to try. And I hope that most of you would join us for the other ones that we're doing, and maybe make your own salad bowl version of what a budget works for you. But definitely do have the encouragement and the means to do so, because there's so much help out there. If you're really struggling, but do take advantage. You're seeing a lot of places now, financial institutions that do offer a personal finance manager that can help within the app or the mobile application manage your expenses. So you try it. So I hopefully that was a good explanation for the 50, 30, 20. Again, I always like to point out that the savings, don't beat yourself up if you are taking advantage of some of these 401ks or these forced savings plans. Don't think that you are living paycheck to paycheck, because you're not. And there's a lot of people that take advantage of that. So don't beat yourself up. That's a common one that I see. And then try sticking to it. Maybe have fun one time and just see how tight you can make it. There's a lot of people that do financial fasting within the first couple months of the new year. They just try to see how much money they can absolutely save. And that's a good thing that complements a budget as well, right? We're at the beginning of the year. You have a lot of time to set goals for yourself. Hopefully this is one of them. So without that, I want to thank you for your time today. And if there's any questions, please feel free to unmute or speak or drop them in the chat. I will also send out a follow-up email with this recording and an opportunity, if you have more personal questions that you would like to ask, you can respond at that time. All righty. Well, thank you so much, everybody. I really appreciate it. Hope you have a wonderful afternoon and an even better weekend. Talk to you soon.